Aloha and welcome. Thank you so much for spending part of your Friday with us, especially right now, right before lunch. My name is Nani Barreto, and I'm one of the co-directors of Hawaiʻi Wildfire Management Organization. I'm joined today by my co-director, Elizabeth Pickett, and our colleague, Jen Myers, who is helping behind the scenes. We are so grateful to have such a wide mix of people with us today. We have community members, we have our agency and organizational partners, lots of Firewise leaders, and members of the broader public. I think we had over 180 registrants. This topic has been coming up more and more across Hawaii, so we're really glad to be able to hold this space for this conversation and be here learning together. So here's how we'll spend our time together today. Most of the hour will be dedicated to hearing directly from our guest presenters. We're really lucky to have an incredible lineup of national experts joining us. And then after that, we'll reserve some time toward the end for questions and discussions. A few quick housekeeping notes before we dive in. This is a Zoom webinar, so attendees are muted and your cameras are off. We do encourage you to use that Q&A feature at any point during the webinar to submit your questions. You don't need to wait until the end. So if you just toggle your cursor down to the toolbar on Zoom, you should see that Q&A. Members of the panel and our HWMO team will try our best to respond to as many questions as possible in writing as they come in. Other questions, though, we may hold to address live during the Q&A portion at the end. And of course, if we don't get to all of the questions today, we'll make sure we follow up with all of the registered participants afterwards. And just a heads up, this webinar is being recorded. And yes, you'll all be getting a recording after the event. And we'll also put it on our HWMO YouTube channel and social media. So that's it for logistics. And with that, I'm going to hand it over to Elizabeth, who's going to share a bit more about HWMO and why we felt this was an important topic to bring forward right now.
All right. Well, thank you, Nani. And thank you, presenters, for being here. And to all of you participants who are joining us, just a little background here, which is that as part of Hawaiʻi Wildfire Management Organization's role to support wildfire readiness across Hawaii, we do spend a lot of time thinking about what's coming next. So what risks, what pressures, or what shifts may be on the horizon for our communities and our private and public partners. And the wildfire insurance landscape is one of those emerging issues. So while it might feel somewhat new here, in Hawaii, there's a lot of lived experience and hard-earned lessons from other regions that are already navigating this reality and have been doing so for quite some time. So one of the ways that we support our partners locally is by bringing those voices and experiences from elsewhere into a room together with all of us locally so that we can learn early, we can be tracking and keeping pace with what's going on with our friends and neighbors across the country. And then we can learn together and over time work together. So this webinar isn't about solutions yet or next steps exactly in Hawaii, but rather it's about building this shared baseline, a shared foundation of understanding, so that as Hawaii begins to grapple with these issues, as we start to see challenges and opportunities and make decisions, that we're starting from a really informed and thoughtful place as opposed to from scratch or thinking we have to invent anything new. So we're really, really grateful to our presenters for sharing their time and their expertise, and to all of you for being a part of this learning process so that we can have our whole state and ship and all our partners all moving forward together. What Nani mentioned and what we have planned for the day is that each speaker is going to introduce themselves and then provide information from their knowledge base and experience, and then they'll pass it on to their next presenter to do the same thing, so that by the end we have this diversity of perspectives and experience. And then once we have heard from the full lineup, we will then have Q&A and discussion. So first up, we have Juliana Anastasatos, and she's from Verisk, and she's going to go ahead and start off with her presentation. So thank you so much.
Thank you for that introduction and for having me. I'm delighted to be here and talk a little bit about insurance first. And so what you can see from these headlines is that there really is a growing concern in the news amongst consumers about how the increasing wildfire disasters are straining the insurance market. And while many of these headlines focus on California, we know that the impact is spreading across many states, including to Hawaii. And so as we discuss resilience and wildfire resilience today, I want to just posit that this is not just about the physical resilience or physical protection that you'll hear about, but it's also about financial resilience. And that's where insurance comes in. We know that insurance plays a very vital role in both homeownership and business continuity. And for the insurance market to remain stable, insurance carriers must be able to both assess and price wildfire risk confidently, but perhaps more importantly, they need to trust that that risk won't just keep escalating. And so to be clear, today, what we're going to be talking about and focusing on is personal lines property insurance. And on the next slide, I have a little bit of a description about what insurance is. Here, we're talking about coverage for homes, rental properties, condominiums, mobile homes. And this is different from liability insurance, which is what you have with your auto insurance coverage. And it's different from commercial property insurance, which covers businesses and industrial buildings. For this discussion, I'm focusing mostly on personal lines and how homeowners insurance is impacted by the wildfire peril. And so to start with, I know we have a really diverse group here, but I want to talk a little bit about what insurance is and what it's not, just to sort of level set where we are. Insurance is a form of risk pooling, and this is a foundational risk management strategy. It's a way to spread the financial risk across many people. So each policyholder pays a premium into a shared pool. And when someone experiences a covered loss, then funds from that shared pool help to pay the claim. And because not everyone has a loss every year, this system is how we keep premiums affordable. Very closely tied to that is what insurance is not. And it is not a savings account. And it's very important for homeowners and consumers to understand this. That if an insurer, or rather a homeowner, were required to save enough money to cover a catastrophic loss themselves, most would never be able to afford it. And so a quick example is an average home in the United States, 2,500 square foot home, would cost about $300 a square foot. That's the average rebuild cost across the country, $300 a square foot to rebuild it. So that would cost about $750,000 to rebuild that home. Now, considering that the average annual homeowners premium across the United States is also about $2,000, if you're just putting $2,000 a month or a year into a savings account, it would take roughly 200 plus years to save that amount in an account, earning an average interest rate, even compounded annually. Now, insurance, rather than the savings account, provides you with immediate financial protection, not long-term savings. So once a policy is bound, the coverage begins. So even if a claim occurs shortly after the policy is bound, the insurer is obligated under the contract to pay according to its terms. So what you're paying for is really peace of mind. It's knowing that when a disaster strikes, financial support will be available. The next point that I want to make about insurance is that it's regulated heavily by state departments of insurance. And so even in states like Hawaii, where your insurance department doesn't approve rates in advance of a carrier implementing a rate change, they still have to, carriers are still required, even to the Hawaii Department of Insurance, to justify their rates. And in many other states, they actually need prior approval before they can make any changes. And so what does it mean to justify the rate? The insurance carrier must demonstrate that the rate isn't excessive. So this protects consumers from being overcharged. They also have to demonstrate that the rate's not inadequate, which means that the carrier is collecting enough money into that shared pool that they will have money there to pay the claims that need to be paid that year. And then the last thing that they have to demonstrate generally is that the rates are not unfairly discriminatory. And what this means is that similar risks are being priced similarly. So in insurance, discrimination actually refers to what we call risk-based pricing. In fact, it's appropriate for a higher risk property to pay more than a lower risk property, but insurers can't charge different rates for properties with the same risk profile. So what this does is it ensures that there's fairness for the consumer, but also financial sustainability for the insurer. Next point that I want to make quickly is that insurance is governed by state law. It's a legal contract that's governed by state law. And this is a little bit unusual that there's really no federal aspect to the interpretation of insurance policies. Each policy is a contract. It outlines the terms of the coverages. It outlines different conditions and perhaps exclusions, which are specific situations or causes of loss that are not covered by the policy. And while the contract is very lengthy, I think there's some misconception sometimes amongst homeowners or consumers. The actual contract can be anywhere up to 60 pages long, sometimes more. Understanding them is very key to understanding what protections you have in place. One other point that I just want to make that's not on this list, but it's just the difference between cancellation and non-renewal. This is sort of a personal mission of mine to help people understand the difference between these two things. We often will hear consumers say that their insurance policy was canceled, maybe even because of the wildfire risk. And in most cases, this is just a simple understanding. The term cancellation in insurance refers to when a policy is terminated during a policy term. And it's very rare for a policy to actually be canceled. It's allowed under state law really for only very serious issues like fraud or misrepresentation, perhaps non-payment of a premium. But what they might likely be referring to is non-renewal. And that happens at the end of a policy term. And the reality is that even if you've had a policy for a number of years, carriers have the right and even the obligation to the rest of their policyholders to assess their risk exposure on an annual basis. And if they find that they're over-concentrated, they may choose to non-renew policies in high-risk areas. This annual renewal is similar to what you might understand about like a term life insurance policy. That policy lasts for a specific period of time. For homeowners policies, it's 1 year. It's not a guaranteed policy for the life of the home or the homeowner. So those are things that are important to understand, and that at renewal, a carrier might use a wildfire risk assessment tool like those that Verisk offers, the wildfire catastrophe model, to evaluate their overall exposure and determine how many homes they can comfortably continue writing in high wildfire risk or other peril areas. As we've seen the wildfire risk increasing and activity increasing, combined with inflation, rising construction costs, it is clear, and we've seen it, that non-renewals are becoming more common. So with that, I want to take a look at some stats. And so just sort of to understand where we find ourselves with the insurance industry. This is a graphic that shows sort of how wildfire losses are impacting the insurance industry. And this is from data that Verisk has collected in our property claim solutions. And you can see that in the 1980s, and this is countrywide, in the 1980s, insured losses totaled just over $100 million for the entire decade. But then you can see that by the 2000s, that number jumped to about $3.6 billion. And then in the 2010s, losses increased nearly tenfold. So we saw about $36 billion worth of insured losses in the 2010s. Now we're only halfway through the 2020s. We're seeing those numbers have again nearly doubled, especially after major events like the Los Angeles wildfires last year. And this sharp rise is due to recent wildfire disasters that have destroyed hundreds or thousands of homes at one time. It's a fundamentally reshaping of the insurance industry landscape in many Western states. And this graphic really exemplifies the notion that today's wildfire risk is markedly different than that of that was presented to the insurance industry, even just 20, but certainly 30 or 40 years ago. This is driven by the changing climate impacts, combined with where and how we've built homes into the wildland-urban interface. And my friend Michelle's going to talk a little bit more about that. On the next slide, we see a map that is, we built it using Verisk's Fireline tool, which assesses wildfire risk at the property level. And while carriers don't use the map itself, they'll rely on Fireline's granular data that is targeting a specific property to evaluate wildfire hazard for individual structures. But this is just something we put together for a visual that you can see that the areas in red are high to extreme risk zones, and there's a fair amount of red in the Western states. In the next table, you can see what I've done is I've put the total number of structures in the states where Fireline is available juxtaposed against the total number that are located in high to extreme wildfire risk areas. And I highlight on the next slide the states with the highest percentages of structures in high to extreme wildfire risk areas. And so you can see, California has nearly 2 million such structures. It's actually only 8% of the structures in the entire state, whereas you see a state like Tennessee, over 25% of the homes there are falling into high wildfire risk areas. So this is stark. It's a stark reality for insurers to realize that these are homes that they're insuring. And despite this growing risk, what we hear routinely is that insurers really want to continue offering coverage, but they need confidence that they're understanding the risk. And they also need confidence that the risk won't keep escalating. In order for them to stay solvent and able to pay claims, they're having to make these really tough underwriting and pricing decisions. But as one expert has said, when insurers retreat or they spike their premiums, they're not just being mean. They're pricing the part that many firefighter professionals, municipal and local leaders, and land use planners might have ignored up until now. And so the last thing I want to just point out is that you're going to hear a lot today about how these homes and neighborhoods don't have to be uninsurably risky, and recognizing the challenges that the insurance industry and the community at large is facing. Some prominent fire chiefs have posited this, that we cannot suppress, regulate, or market price our way out of the wildfire crisis. We must mitigate. And so insurance carriers and other stakeholders like Verisk continue to partner with our friends at IBHS, NFPA, and Headwaters, investing in resilience initiatives to better understand the impacts of mitigation strategies that will bend down the wildfire risk. And the expectation from insurers is that large-scale adoptions of these mitigations will provide greater comfort for the insurance carriers to insure these homes in these risky areas. And with that, I'll turn it over to Michelle.
Thank you, Juliana, and thank you very much for having us together to give this presentation today. So I'm tasked with talking about the big picture and what do we know about wildfires? What do we know about this thing that we call the wildland-urban interface or wildfire disasters? Well, one thing we know is that we have more than 44 million homes located in wildfire risk areas. This is more than 1 in 3 homes in the United States. It's one of the fastest growing land uses. And really, most of the built environment in the United States are residential structures of some kind. So this is a really enormous risk issue. The problem is that we see risks are increasing, not only because we have so many homes at risk, but that fires are becoming more frequent, burn hotter, and last longer, clearly causing more damage and costing more money, as Juliana just pointed out. The outcome is more homes are destroyed and more money is spent on response, recovery, and rebuilding. So this is really what all of us on this call and HWMO have really committed to trying to solve. Our vision statement as a team of collaborating organizations is that a more resilient future when wildland fire is not a disaster, because people, homes, and the community are prepared ahead of time to receive, respond to, and recover from fire. And it's a great vision statement, and I'm excited that we'll be sharing some of the science and the knowledge that we have about how we can get there. But right now, we really have a wicked problem on our hands. And some of you may know me that I'm from the Boston area. Wicked means something else in Boston, but this is a social science term. I didn't make it up. It was made up by Australians in the 1960s to describe particular kinds of social problems. And a wicked problem is one that's hard to define. If you want to know what the wildland-urban interface is, you could probably get about 100 different opinions on that definition. So I think it fits. It's multi-causal. A wicked problem is incomplete, contradictory, and has changing requirements. It is socially complex with no clear solution. And unfortunately, solving one aspect may reveal or create other problems. And finally, I've been in this business a long, long time. And I know it is not the responsibility of any one entity. So it is really, again, great to be with so many partners today to talk about this. Bad news first. The problem is getting worse with a volatile climate. We have extreme droughts and hotter temperatures, but we also have bouts of heavy precipitation that then grows the vegetative fuel that drives the initial wildfire. We also end up with major drought issues with water impacts on our firefighting and other services. We have had a legacy of land use and management decisions all across the country with a growing population that has built and built and built into wildfire-prone areas, in many cases not using any kind of standard that would protect these buildings from the fire threat. We also see an overgrowth of forested lands due to longstanding federal and state policies of suppressing every fire that occurs. So that's the bad news. But I like to focus on what we can control. And this is the simple fire triangle. This goes for any kind of fire. The three things you need to have for a fire to exist are heat, oxygen, and fuel, along with that ignition. And we really can't, in a wildfire, control the heat or the oxygen, but we can control the fuel. Now, in this business, I learned this because I didn't come out of the fire service. I learned that when firefighters in this business say fuel, they don't mean gasoline, they mean trees, grass, and vegetation that burns. But in the wildland space, we also talk about homes as fuel. Our homes can be more ignitable than the vegetation around them in some cases. So the way that we place our homes, the location, the design, the building materials, and the immediate surroundings all contribute to the potential for this disaster to occur and homes to become fuel for wildfires. Really, what we're seeing is location is really important. History is very important. You will see a lot of California examples, and I think there's a double-edged kind of conversation that we have. People say, well, that's California. They're bigger than everybody. They have more fire. We've learned a lot from the tragedies that have happened in California, and I'm glad that at least we are hopefully learning. But when we experienced the Tubbs fire in 2017 in Sonoma County, this is a map of the city of Santa Rosa, you see the Tubbs fire perimeter in black, and you see the Hanley fire in 1964 in red. They look very similar. So here's a truism: where fire has been, fire will return. This is part of the ecosystem. This is part of nature. However, there's one little thing that I noticed on this map that was different in 2017, and that's that little black area poking out at the bottom of the map. And that's because in 1964, when the Hanley fire burned, it was burning the fuel that was available that was primarily vegetation. There were homes there, but mostly forests. And by 2017, we had a neighborhood called Coffee Park that didn't exist in 1964. And this is what happened to Coffee Park. So the homes as fuel, unfortunately, played out with thousands of homes destroyed in Santa Rosa. The hard lessons that we have been learning, we're very fortunate that CAL FIRE, the major agency through the Department of Forestry with California, and I want to give credit to Steve Hawks for this imagery, as he was on scene doing a lot of this data collection at the time and analysis. What they found through these major disasters, and these were 8 fires that they looked at, were that 93% of all the structures in the fire's perimeters on average were completely destroyed. So we're talking over 38,000 homes. And the destruction's happening very, very fast, much of it within 24 hours of the ignition. And so it really tells us that we can't start fighting a wildfire when the smoke's in the air. We have to be out ahead of this long before. And so when Juliana had that quote from the California chiefs that we need to use mitigation, that is really the way to go. And that's what I've been working on at NFPA for almost 25 years. It's also a question of land use and management that contribute to wildfire disasters. Again, what we need to look at is the natural and beneficial functions of ecosystems, including fire. But when we put these vulnerable structures in the way, they do become catastrophes. I do want to pass it now to Steve Hawks, who is going to, I believe, run the slides. So I think I need to stop sharing. Is that right? Okay, I'm going to stop sharing so Steve can speak to how these catastrophes operate. Thank you.
If I might jump in real quickly,
Go ahead.
Steve, could you introduce yourself and your organization? Michelle and Juliana, maybe you can do that after, but if you could start there so people have some context from where you're coming from, that would be really helpful.
Absolutely, and thank you. Confirming you can see my screen okay.
We can.
Okay, thank you. And hello, everybody. I'm Steve Hawk, Senior Director for Wildfire at the Insurance Institute for Business and Home Safety, or otherwise known as IBHS. And um, IBHS is a nonprofit organization that is funded by the insurance industry and reinsurance industry. And we conduct research on severe weather and wildfires and how they impact homes and businesses, what those vulnerabilities are, and what we can do to meaningfully reduce the risk so that they have a much higher chance of surviving a real life event. And at IBHS, we really focus on for wildfire that conflagration scenario where we lose hundreds or thousands of structures in a single event, like we saw unfortunately in Lahaina and most recently in Los Angeles early last year. And we have really honed in on a set of factors that exist for that conflagration scenario to unfold. And that's drought conditions when we have the vegetation where the wildland fire typically starts is very dry and very receptive to the rapid spread of the fire through that vegetation. And then wind. And wind is the single biggest factor that leads to extreme fire behavior and can quickly push the fire through the drought-stricken fuels into a community where we live, and then that fire can lead to that conflagration scenario. And so I'd like to show you, the wind component is such a huge factor, and I see the video's a little bit slow and maybe not playing, but if you look at the right-hand side, and these are two large sheds that we had burned at our research center located in Richburg, South Carolina. But on the right-hand side, we have a shed that's burning without wind, and you can see the height of the fire there on the screen shows 20 feet. But when you add wind to the same size shed and the same fuel loading of it, now we're stretching that flames out to almost twice as far, about 40 feet. And so not only are the flames lowered to the ground and stretched out to where they can reach things and ignite them at a longer distance, the heat that normally goes up with that, called the convective heat, is also pushed to the side and flowing down along with the wind. So everything that's downwind of that fire is being really superheated at a very fast pace and can reach its ignition temperature very quickly. And so this is the conditions that we experience when we have the most structure loss. And so I want to step you through kind of how this unfolds. So we have a start of a wildfire, and usually that's in the wildland area in wildland fuels. And when that wildfire starts, it's producing embers, flames, and radiant heat. And those embers travel very long distances in the wind out in front of the main fire. And when they land, whether it's on the house, maybe travel in through a vent or other void space of the house, they can directly ignite the home. And then land around the house and ignite some fuel that's around the house, leading to the ignition of the house. And meanwhile, the flaming front is burning up against the outer edge of the community. And whether it's through the flaming front, through the flames and the radiant heat and that embers that they produce, or the embers flowing into the community, as we begin to see homes ignite, then that sets the table for the conflagration to unfold. And the fire fundamentally changes from a wildland fire at that point to an urban fire burning urban fuels. And in the urban context, fuels is anything that's combustible and that can ignite and allow for the spread of the fire. And so that's homes, fences, ornamental vegetation, anything, boats and vehicles. There are another examples. So a lot of things that you don't necessarily think that would ignite and spread the fire can and do. And so that leads us to kind of the next set of factors that lead to how intense our conflagration could result, and that's structure density. So how closely spaced are structures from each other? The closer the spacing, the easier it is for one that's ignited to ignite the next one, particularly downwind. The connective fuels, or the things that are between the homes that are combustible, that can allow for the uncontrolled spread of the fire between homes and within the community. And then the building materials that the homes are made out of themselves. And the more vulnerable the components and materials that are used, the easier it is for the fire to exploit those components, leading to its ignition and loss. And so the good news is we aren't powerless against wildfire, even these high intensity wildfires. And as Michelle very well pointed out, that really the main focus we need to look at is that fuel component of the fire triangle. And that's what we do when we look at wildfire mitigation. And at the individual parcel level, we look at two particular areas. The first area is the home, what the components are, the materials that the home is made out of, and how can we increase that to be more resilient through the use of better building materials. And then the second component is the area that surrounds the house and those combustible items that are in that area. And can we either remove an object from close to the house? If we can't remove an object, can we move it further away on the property if we have the space to do that? So if it does ignite, it can safely burn and not expose the house to extreme radiant heat and the flames from the fire. Or can we make an object more resilient? In the case of that non-combustible fence at the bottom of the screen, it's changing a wood fence and making it a non-combustible alternative or material, so that if the fire is burning on that wood fence, it simply hits that non-combustible space and then dies out. And while we're looking at reducing the exposure of the combustible items that surrounds the house, then we look at all the building components, the roof, the eaves, all the way to the ground, the materials that they're made out of, and how can we make those more resilient to withstand the remaining exposure of the things that will be on the property that will ignite and burn under the extreme wildfire conditions, so that homeowners have a home to return to after the event is over. And so we have developed what we call the Wildfire Prepared Home Program, and it is a parcel level based program, and it has two levels of mitigation actions where a homeowner can achieve a certificate of designation. And the first one is on the left-hand side, and you see embers that were produced by the Eaton Fire in Altadena, California. And really the first level wildfire prepared home is based on mitigating the risk to a home and its immediate surroundings from the embers produced by the wildfire. So it focuses on those materials and components that are most vulnerable to the ember exposure, like the roof, other features of the home, gutters, vents, etc., and then defensible space, with particular attention to that first 5 feet that surrounds the house, of having nothing combustible in that area. We have seen time and time again during our experiments at our research center, during our post-fire analysis, that when you have combustible items in that 5 feet, they can ignite, and even a very small fire, low intensity fire in that location can easily exploit a vulnerable component of the house. And then shifting over to the right-hand side of the screen, our second level of designation, the plus level, which really focuses on protecting the home from the flames, the radiant heat, and the embers from the fire to the maximum extent, and addresses all those other components of the structure, from the eaves and the siding and windows, etc., that are most vulnerable to the flames and embers. And we know that wildfire mitigation starts at the individual property level with mitigating the risk. But wildfire is very unique in that you share the risk with your neighbors and with the other neighbors across the community. And simply random acts of few homes doing mitigation is a great start, but it needs to occur across entire communities to give them a much higher chance of survival. And so it's really not just one parcel at a time, it's doing that one at a time across entire communities. And so that leads us to our second, if I can get the slide to change here. Leads us to our second wildfire mitigation program called the Wildfire Prepared Neighborhood, which looks at an entire neighborhood with a defined boundary and really focuses on mitigating the risk to each individual parcel within that area and looking at the fuels that surround the community as well as within the community and trying to limit the ignitions of homes and limit the spread, just the uncontrolled spread of the fire within the community to give fire suppression resources a much higher chance of defending the community and homes. And so we look at the outer edge of the community and decreasing the probability of those homes in that area igniting from those flames, radiant heat, and embers. We look at the inner portion of the community for the embers that can flow into the community and ignite those inner homes from the ember exposure. We know that embers are going to land and ignite fires within the community, but can we slow the progression of the fire when that does occur to, again, give fire suppression resources a much higher chance of defending the community at large. And so we really have a structure ignitability problem that is leading to an insurance issue. And if we can solve the structure ignitability problem and allow homeowners to have a home to return to after the fire passes through, then we have a much better chance of solving this insurability crisis. So survivable is insurable. And with that, I'm going to pass it off to Kimmy to take it from here, and I'll stop sharing.
Great. And similarly, we're going to take a minute here to transition to my slide deck. And let's see here. Jen, can you give me a thumbs up if you're seeing my screen?
We absolutely can.
Beautiful. Well, thank you everybody for this opportunity to present, and my fellow panelists as well. My name is Kamiko Barrett, and I'm a senior wildfire researcher and policy analyst at Headwaters Economics. And Headwaters Economics is a nonpartisan research organization. We are based in Bozeman, Montana, and we work with communities and decision makers across the country to help surface and interpret data in order to inform improved land management decisions. And so far in this presentation, we've heard a lot about the complexities of increasing wildfire risk and by association, the rising instability within the insurance market. And so what I hope to do is discuss a little bit about how these damages and costs are causing insurers to make adjustments and how, where, and who is provided coverage in high-risk locations, but also to help unpackage, as Michelle noted, this really wicked problem and looking at some of the implications and the costs for these mitigation measures that have been identified and outlined by both Michelle and Steve. And so as noted, this is a wicked problem, and it's requiring a fundamental need to shift our mitigation efforts towards the homes, the neighborhoods, and the community itself. That once a wildfire leaves the wildlands, it is no longer a wildfire problem, but a structure-to-structure urban conflagration characterized by extreme weather conditions and home density as well as fuel continuity. And that very importantly, in this sense, the home itself is a source of fuel. Therefore, the most effective mitigation measures must treat it and the collective neighbors as such. And you heard Steve just outline why that is. So now what do we do with all this really helpful information? And where do we take it from here with respect to community resilience and insurance stability? So I'm going to just quickly step back and preface a little bit of what you heard Juliana talk about and what insurance is in the first place. So 3 things to note and keep in mind. First and foremost is that insurance is pooled risk. And again, you heard Juliana note this. It means that any increase in a potential loss translates to a price adjustment across the board and amongst all policy holders. When insurance providers are likely to operate at a financial loss, they will make adjustments in their pricing in order to remain financially solvent. Number 2, very importantly, insurance is financial resiliency. A healthy insurance market benefits everyone because it reflects the ability for homeowners, the local government, and the state to absorb a financial shock and rebound. Quite simply, those homeowners with insurance will recover and rebuild quicker than those without. Lastly, very importantly as well, is that insurance is not risk reduction. It is risk transfer. By implicit design, insurance is post-disaster recovery. And as much as insurance is certainly part of this wicked problem, in it itself is not the solution. Insurance will not change the risk already on the ground. It is simply a price signal of that existing risk. So then if insurance is a price signal of risk, how does it relate to wildfires? Well, let's track out this scenario as it unfolds commonly on the ground and within communities. As we keep noting, wildfires are indeed getting more expensive. In fact, they are the fastest growing hazard-related damage in the United States, with 9 out of the 10 most expensive wildfires occurring since 2017. For many insurers, providing coverage in high-risk locations is becoming cost prohibitive. As a result, insurance becomes unaffordable and inaccessible, stressing both homeowners and the insurance market itself. Insurers can't cover their losses, and homeowners either go without insurance, become underinsured, or pay a higher rate for their coverage. And an unstable insurance market has cascading implications on the housing market, on the security of mortgages, on the financing of municipal bonds, which has very direct implications on the funding of capital improvements and key community services. When a disaster does strike, unfortunately, those without insurance will struggle to rebuild and to acquire housing. Displacement and dispersion increases. The local government budget becomes strained, and the federal government will step in and invest billions and billions of dollars in post-disaster recovery and relief. This is the scenario that plays out time and time again in recent catastrophic wildfires. And inasmuch as we know how a home burns down, so too do we know what happens when the smoke clears. This is the same cycle that repeats itself over time. And the impacts on insurance, and therefore the ability for a community to rebound, can be significant. So what can we do about this? How do we break this cycle? Well, what we really need is an equitable, stable, and sustainable insurance market. And so in the most generalized sense, what this means is that from a homeowner's perspective, what they fear is a lack of consistent, reasonable, and comprehensive insurance. So what they want to see is reliable, affordable, and available insurance. The insurance industry, on the other hand, knows that they are spending billions of dollars in the rebuilding of homes and neighborhoods. So what they want to see is proactive risk reduction before that wildfire becomes a disaster. And there's a couple of different models that are being proposed out there to try and address this. On one hand, this is not exhaustive, by the way. These are just a couple of different templates out there. On one side, you see voluntary certification programs, such as Wildfire Prepared Home by IBHS. The other models look at community-based catastrophic insurance. So these are kind of locally led initiatives that represent a pooling of different policyholders. Another alternative is parametric models. This is used for other hazards and is a trigger-based model in which an automatic payout is met. And then fair state plans, which is essentially subsidized insurance that is sponsored through the state. All of this, of course, does require some degree of state regulatory reform. But of all of these models, that which seems most tractable and a more immediate solution, something like a state fair plan, are these certification efforts. So we're going to dive into that one in a little bit more detail here. So what is a certification program? This occurs at both the parcel level and the neighborhood scale. It has to be demonstrated and validated by the insurance companies. They must agree to it, and state regulators must approve of this. And the risk reduction efforts must be maintained and monitored over the long run. This, of course, is a simplified approach. In order to build up and sustain this type of model in a community, there are a set of key ingredients that are required. And I'm not going to get into all of this in detail, but some of those efforts look at staffing and capacity within the community or the county. This has to be supported by data that is available and transparent, including risk modeling efforts. This involves communications and outreach, educational awareness to both homeowners, elected officials, and the state regulatory commission itself. Looking at collaborative partnerships across the board involving the nonprofit as well as the private industry, and then the investment piece. And so this is the cost. This is what I really want to dive into in the remaining part of this presentation. So how much would this all theoretically cost? We're going to do this by breaking it apart to the individual scale. So as the individual homeowner, what would we be looking at for some of these mitigation measures to the structure or to the home? So this is based off of a study that we actually did in partnership and built off the knowledge of IBHS, as well as on behalf of working with HWMO. And so we looked at these costs for building a wildfire-resistant home in Hawaii. Some of the materials are customized for Hawaii island-specific market, and some of them are brought in from the mainland. So you have to keep that in mind when we talk about the price variation here. But let's look at this. So if this is a typical home in Hawaii, when we're looking at the good mitigation measures, essentially addressing that which prevents from ember ignition, you're looking at things like a cleaned roof and a gutter system, trying to get rid of that debris, a lot of the mitigation measures that we heard Steve talk about. You're looking at 6 inches of metal flashing at any vertical and horizontal intersection in order to prevent that ignition from occurring from dried accumulation of debris right there at those joints. Things like maintain vegetation in and around the home itself, as well as what would be considered as part of that lanai or the deck above and below it. And those costs can be pretty minimal because there are a lot of efforts that are just done as an individual homeowner, around $5,000, give or take. When you start looking at the better wildfire resistant mitigation measures, this can also address things like radiant heat and direct flame. So this would look at things like the venting systems, all the exterior vents, what would be in your eaves, what would be in your foundation vents, as well as what would be in your roof line, non-combustible mulch and fence. This is really critical when you think about fuel continuity and what can lead, say, from a wooden fence. Replacing that 6 to 12 inch of vertical siding, and these accumulated costs can go up to around $10,000, $15,000. And then when you're looking at the best, most optimal level of wildfire resistance, this can look at things as an entire roof replacement or entire decking material replacement, looking at that gutter system, which should be made out of metal, things like enclosing those eaves with a non-combustible soffit material, as well as that non-combustible vent or that flame and ember resistant vent rather, and looking at things like dual pane tempered glass windows, which are built to withstand high intensity heat over prolonged periods of time. And if you're looking at this scenario, your costs are going to obviously increase up to maybe $20,000, $25,000 or more, depending on the square footage of the home, its proximity to its neighbors, and the fuel continuity and vegetation around the structure itself. So when you're looking at these good, better, best scenarios, really you're trying to target that middle range around $5,000 to $15,000. And if you're looking for the premium upgrade, again, you'll spend more around $20,000, $25,000 and up. But what must be, oh yeah, and so when you're looking at a proportional increase, you're looking at about 2 to 10% of building cost material upgrade. And then for retrofitting, this can be anywhere from $10,000 to $20,000 because retrofitting requires very specific, idiosyncratic material replacement based off of the ignition vulnerabilities on an individual parcel level. So it's a little bit more complicated. Plus, you have a lot of legacy issues with the existing building and footprint. It's always better to build to wildfire resistance with new development or during the rebuilding process. And what we like to note in all of these presentations is that often the most affordable mitigation measures are also the most effective. And this is addressing a lot of that flammability and combustible surface area on top, around, and within the home itself. So it's looking at these intersections of these vertical and horizontal surfaces, looking at things where accumulation can occur with the debris or the materials within the gutter systems or the roof valleys, looking at what's on top and very importantly, what's underneath the deck. We understand and work in partnership with the counties and with HWMO how much flammable material is stored underneath the lanai. So thinking through the flammability of those products and materials and how can you contain them through screen meshing or other sources of ignition prevention to keep them from catching fire. And then looking at that non-combustible zone in and around the home, as well as what is around your home and the neighboring structures. We also know that Hawaii is not alone in this, and that right now there's over 1,000 other communities and cities within the country that face a very similar profile as Los Angeles similarly did. And this is that fuel continuity, the high density of homes, the extreme weather conditions that propagate the structure to structure spread. And that in Hawaii itself, there's more than 40 communities that face that similar profile. And we also know that we have a lot of lessons to learn from the past. This is a post-fire analysis report that was shared with me that came out of the 1961 Bel Air Brentwood fire. And in it, the authors note that the structures themselves were the ignition source, and that the structural conditions, including the roofs, the windows, and the eaves, led to flying embers and superheated air, also known as radiant heat, spreading and leading to structure propagation, and that this augmented and overwhelmed firefighter response, leading to fire peril, and that otherwise known as these architectural invitations to disaster. Have we not learned the lessons from the past? Wildfires are indeed inevitable. We cannot solve our problems using the same thinking we did when we created them. We cannot get to the point of normalizing these disasters either. We do know how to do things better, smarter, and safer with wildfire in mind. I think with that, here's contact information for all of us. I think we're more than willing to answer follow-up questions that we have on this presentation time right now, as well as follow up through email or phone call. I think with that, I'll end my portion of the presentation and turn it back to HWMO.
Thank you. Thank you so much. That was really great. Mahalo nui to each of you for your super thoughtful and information-rich presentations. We really appreciate you taking the time to share your expertise and your perspectives with us today. So we are going to move into the Q&A portion of the webinar. To start, we're going to pose some questions that were submitted in advance during the registration, and then if time allows, we'll do our best to answer questions that have been coming through the Q&A, although I've noticed our panelists have been keeping up with those questions as well.
Yeah, and we also want to acknowledge that many people on the webinar are joining from Hawaii and understandably thinking about what all this could mean here. And so we're going to take as many questions as we can in the little bit of time we have left here. But also, I really want to note from our organization's perspective, this is really just the beginning of all of us learning together and having these conversations and unpacking what we need to and guiding our collective future. So as Hawaii's context changes, as our challenges and opportunities continue to take shape, we will be creating space for Hawaii-focused learning, conversations, next steps, action plannings, webinars, education, all the things we always do, but around this topic as that clarity emerges. So stay tuned and stay engaged, and we're tracking those Hawaii-specific questions that you're putting our way so that we can address them as we move forward over time as well. So with that, Nani, we have a few minutes. You want to just start with some of those questions that came in that we bucketed?
Sure. Yeah, I'll start with a big picture one, and that's about Firewise. And again, all the ones that don't get answered, we'll put in an FAQ and send it to you in the follow-up. But the first question, how does being a Firewise community help with getting affordable insurance policies? If it does, if it doesn't, why not? And do insurance companies offer any kind of homeowners discounts for being Firewise?
Great, thanks for the question. So again, I'm Michelle Steinberg with NFPA, the National Fire Protection Association. We've been administering the Firewise USA program nationally with our state partners for almost 25 years. And when I got into the program 25 years ago, people would say, well, what's this great program going to do for my insurance? And I very honestly told people it will do nothing, because 25 years ago, this was not on the radar screen for insurers. I'll just be very frank about that. That situation has fully changed. I will say that one of the things we want to talk about with insurance is this is, as Juliana so well pointed out, this is a contract between the property owner, the policyholder, and the company. And so those specific questions are great to send right back to your insurance company. Tell me why I'm not getting some support or better rate because I'm doing all these great wildfire mitigations and I'm part of a Firewise community. That's a really good conversation to have. So it is up to the insurer what they're going to recognize. In the state of California, there's a unique law, Safer from Wildfires, that is actually telling insurers that they do have to take Firewise participation into account, which has been interesting because our program isn't designed for that reason. It is not saying, oh, each and every address in this community has done X, Y, or Z. It is talking about, as probably many of you know, a voluntary program across a community that has to go on over time. So some insurers have been promoting Firewise very heavily. I think in general, again, using what we know from the research, you heard a lot of the same phrases from each of us talking about what needs to happen with mitigation. So there's a pretty common ground. So that's where I think everybody has the opportunity. If your state isn't explicitly saying, this is where insurers must give a discount or must consider these kinds of things, that you can have those conversations with your agent or with your company to see what their thoughts are on that. So it really is, it isn't designed to trigger some kind of insurance requirement, and that is going to be state by state. It's also, though, a conversation you can have with your insurer.
Thank you, Michelle. This is for any panelist who feels like you have a sense for how to answer. But we had a lot of questions about timing, timeline, how long will this take? So specifically, how long will it take to create programs, adopt codes, require and take the mitigation action steps needed that will aid with insurance coverage and retention or reduction in insurance premiums? Like, is there a standard timeline that we can expect that might apply to Hawaii that we've seen elsewhere? Like, how long does this whole thing take to really get on top of it?
So I'm happy to shed a little bit of light on that. I think we can take some cues from similar situations, and we saw a program that IBHS also put forward called the Fortified Program in the wind and hurricane prone areas of the country. And they developed a fortified standard that's similar to the wildfire prepared home standard. And it actually it takes a minute. It took maybe about 10 or 15 years before you really started to see a lot of uptake of the citizens themselves, the communities doing that work. And then that being reflected in insurance, at least specifically. But that's just one piece of it. I mean, the local governments taking up these efforts, that's all part of it as well. And I've already just seen, I've been at Verisk now for about 2.5 years. And before that, I had many decades career in the insurance industry as an insurance attorney and a government relations representative. But I've seen a huge inroads made just over the last couple of years. And IBHS is doing a fantastic job of getting out there and educating communities, fire services professionals, legislators, regulators about this program. And so I think it's going to happen faster with IBHS, but there is some learning curve that definitely has to happen.
Yeah, just to add on to that, with our wildfire prepared home program, we're seeing a similar uptake as our fortified program. We are the program launched in 2022 in June in California. We're across 4 different states now: New Mexico, Oregon, and Nevada as well. And we're at 1,600 designations between the 4 states. So the uptake can be a little bit slow. Also, in my previous career with CAL FIRE, I was part of the California Wildfire Mitigation Program, which took a number of years to really develop out that full process of the mitigation actions and the funding stream and all those things that go into developing a program. And that program is operating in 6 pilot communities across California and is at around 200 homes that have completed the process. So it can be a little time consuming.
Could
Thanks,
I add, Steve, too, that even in states where this is not formally available, the prepared homes designation and all the details that go into it, that information is on the website. That information is available. You can go and look at that and make your plan and start doing your mitigation. So that information's out there.
And even in states where it's not offered, some insurers are recognizing it in their discounts. And even in states where that's not mandated. And we've seen in California, it's public, we can say this, that there's one insurance carrier in California that's actually guaranteeing writing policies for homeowners that have successfully mitigated to the IBHS Wildfire Prepared Home Standard. So those things are coming.
And if I might circle back to the point of this conversation is about insurability, but if you swap out the word safety, it might encourage you to take that action sooner because we want you to be safe. We want you to mitigate. The whole idea is to mitigate risk and to be safer. So the incentive can also be the protection and safety of your home and family and your neighborhood as much as insurability. So I just want to circle back to that is actually foundational to all of our work together as a collective and all the partners here today is that we just want everybody safe And there's things you can already get going on, and there's a lot of information available from all the partners who joined us today. We are actually running out of time here, so we thank everybody for joining. Mahalo nui again to our panelists for sharing your time, for your expertise and perspectives with us today, and all the work you've done to contribute across the country and to all the work we're doing in Hawaii. And we want to say thank you also to everyone who joined today for your thoughtful questions. We know we didn't get to as many as we hoped, but again, this is an ongoing conversation. And today's conversation is part of Hawaiʻi Wildfire Management Organization's role in helping Hawaii learn from national experience to build shared understanding and to get ahead of emerging wildfire-related challenges before they're fully laid out here. So all of this is complex and it's evolving. There's no quick fixes, but you can run outside and rake and sweep and start doing your yard work and get your family evacuation plan in place. And we encourage you to do that while we're also working on this longer game and this longer arc of getting everything wildfire ready and wildfire resilient as we move forward. So again, everybody, thank you for joining to be a part of this important discussion, and we hope you enjoy the rest of your day. You can follow up with us. You can follow up with our partners here. All of this will be posted online and available to share out as well, so we encourage you to do that. And with that, we'll say goodbye and thank you, and a hui hou.